Good morning, traders. Silver just smashed the $50 per ounce for the first time in 45 years, and the first time since the previous high in 2011. While gold, also of course above the 4K for the first time in record. But of course, we do know that silver was lagging all of this time. Um, and both pulled back on technical and also fundamental reasons following the Gaza ceasefire news. So, looking at silver, this is a very big milestone. We broke through the resistance, but of course, we didn't hold. Okay, there is the a clean sort of double top for now. Okay, resistance on silver, and we might be looking for a pullback. When it comes to gold, the 4K becomes a very important level. Okay, it dropped yesterday following the Gaza ceasefire, but uh, we are for the week at least still below the 4K, but have a few hours to go. Closing above the 4K is going to be an important, but not uh, but not determinant, if that makes sense. We have had 1, 2, 3, 4, 5, 6, 7, 8 weeks now in ascent. So it is likely to see a pullback. That this could continue to next week, perhaps a week after. It could consolidate, it could come lower down. We do not know, but we're going to see the shorter term signals. But now, let's just focus here on what we came for silver. When it comes to silver, this particular move to the upside, although not perfect, and it cannot be perfect, especially if we're talking about commodities because they're a bit less liquid and a bit more speculative, especially silver. Silver has actually managed to come all the way up to around 51.30 or so. But at the same time, if you look at the leg from 2011 up to the 30, okay, in 2020, and the pullback, actually, we're not looking at the pullback currently. Yes, we do. And the pullback down to 17. Look, we are actually seeing a retest. We're actually seeing now a break, okay, in a long time frame, a false break, let's say, of the 1618 at 47. So if we hold above the 47, this is going to be important in the medium term, okay, because going below would open the door to 50, which of course has large implications to the downside or to long positions. Now, with that in mind, this particular scenario, and if we do get a pullback, it's very um, reminiscent of a potential cup and handle pattern in the long term. Okay, now cup and handles, there are much more valid and much more better equipped for long-term upside, in this case because it's a bullish version, when they pull back only a little bit. And typically we're looking at 10%, even less, 10% sometimes. Okay, so if we just said that might be the case, okay, let's just say we do the 0.1 here, just to have that in mind. Where does it fall? Okay, so this comes down at 47.50. But look at this, that's exactly the 1618. So we do have a cluster, guys. So if we do fall some 10%, okay, from that on the leg down, right? Then this would bring us down to 47.50. Okay. And to be fair, it's like this is a huge long-term level, and likely resistance here is likely to form even for a week or two or a few more even. This is the base case, there is scenario where we break through straight away. That's the one scenario, the bullish case. And there is the bearish case where we do break lower than we are expecting. I expect short-term pullback over here, and I expect this to continue higher. However, there is a slight of an issue if we were to see a cup and handle pattern. We actually don't want to see a cup and handle pattern, because if we did see a cup and handle pattern, then that would mean that this would take probably a few years to complete, if that makes sense. So that would be really not ideal, given the cup, it's like 14 years old. The handle would have to be a couple of years um, in terms of duration. Okay, so we do have that currently, but we don't want it. Either way, a cup and handle from 11 up to 50. Understand that it would bring us close to triple digits. Okay, so this is something important to take into account. Whatever the case, though, whatever the pattern in the long term, and we don't want that, a breakout above that level really opens the door to much higher levels at any perspective we look at. Now, I would be looking to placing a ascending channel over here. Okay, and why I would do this, because we can actually replicate that, just move it all the way up and see, have we met resistance somewhere? Is this giving us anything? Well, look at this. We came right at the middle of this channel. So we actually take the standard deviations and we add them on top of the previous structure. And what do we see? We see 51.20 being the level that we actually met resistance. So what could happen? Okay, what could happen is this, perhaps a retracement down here, and then potentially a continuation to the upside. So only just by looking at this particular structure, okay, and I would just probably go and say, let's look at the, hold on, we're just going to put the Fibonacci back for a reason. This is typically the third wave, guys, because we're looking at waves as well. This is an impulse and is an extended third wave. Internally, of course, there are other microwaves, and we have actually gone close to the 200%. So I would be expecting a correction, okay, and further continuation of this particular leg could bring us next to 53, 58, and finally around the 65. So the next long-term resistance for me, okay, after of course the median line that continues to the upside over here, which is around 53, would be all the way up to around 65 in the long term. Okay, now for the short term, because we are all looking at the short term, and since we are looking at the weekly, the best thing one can do is come and draw open, high, low, last week's open, since these levels are close, and of course the open to high in Fibonacci terms. Why? Because this is going to tell us where we are starting currently. Okay, so um, breaking lower, I think we're looking at 48, and then somewhere around 47, with 46 also being potential retracement level if the bearish profit taking, all of that is strong early next week. Now, we do see that this week, okay, we opened at 48, went all the way up to 51.30, and then we are now currently down at 49. This is a 61.8 Fibonacci retracement on the week, okay? That's why we wanted to bring that in. So the 61.8 is an important level, but we reached lower levels yesterday, which makes this kind of already tested scenario, and that's why we are consolidating currently. So I will be looking for a break of 48.30, that's yesterday's low, to open the door down to the weekly open and perhaps lower territories with the 47.27 in mind. On the other side, if 61.80 at 49.30 offers support, we'll be looking for 49.67, another retest of the 50, and then perhaps higher levels. I wouldn't be surprised if we do see 50 taking out one more time, okay? But look at this. This is typically a sign of a um, like a spinning top. This is a sign of potential reversal in the short term, i.e. being a pullback, or in the longer term, i.e. being more of a correction, let's say. So we'll be looking for larger declines. So yeah, these are this is what I have for you today. Of course, the bottom line is that silver just broke to a new high, and that is your market for the precious metal market update for today, for this week. So I will catch up with you next time.